Ladies and gentlemen, hearing all the sounds and voices around, I bet everyone is enjoying the lunch so far. But taking this opportunity, I would like to announce that the panel discussion will now begin. And please join me to welcome the following guests onto the stage. First, let's welcome our panel chair, Ms. Diana Cesar, board member of FSDC, Group General Manager and Chief Executive Hong Kong of the Hong Kong and Shanghai Banking Corporation Limited. Let's welcome Ms. Cesar. Joining Ms. Cesar on stage, we have Ms. Ding Chen, board member of FSDC, Chief Executive Officer of CSOP Asset Management Limited. Welcome, Ms. Ding. Upcoming, we have Ms. Carmen Ling, Global Head, Renminbi Internationalisation, Belt and Road of Standard Chartered Bank. Welcome. Now we have Ms. Lu Ying, General Manager of Global Corporate Banking Department of Bank of China Hong Kong Limited. Welcome. And joining our female panel on stage, we have Dr. Wang Tao, Mainland Opportunities Committee member of FSDC, Chief China Economist, Head of Asia Economics of UBS Investment Bank. Welcome, Dr. Wang. Wow, we have a whole female panel for this section. And ladies and gentlemen, please be seated. And now, I think it's now time for me to pass the stage and also the microphone to our panel chair, Ms. Cesar. Ms. Cesar, this floor is now yours. Thank you.
Thank you, thank you. I suppose you can hear me, right? Okay. Good afternoon, ladies and gentlemen. I can promise you a very exciting panel, looking at our panel of speakers here today. So whilst you're enjoying your lunch, we will have a very interesting conversation around Belt and Road. Now, as Chief Executive of HSBC Hong Kong and a board member of Financial Services Development Council, I am delighted to be here to moderate this session today. Thank you, our speakers. We are very fortunate to have such a distinguished panel of broad and deep financial knowledge for the express purpose of exploring Hong Kong's current as well as future opportunities to support the Belt and Road Initiative. Hong Kong is amongst the world's top 3 financial centers with market capitalization of around $4 trillion US. It's the world's #1 offshore renminbi bond market as well as liquidity pool. And it is a major Asian private equity center managing about 20% of the region's total capital pool. 6 years ago, the Belt and Road Initiative was launched as a global vision with immense promise. It remains one of the most ambitious infrastructure development plans in history, with aspirations to build sustainable infrastructure, strengthen economic connectivity, and expand global trade. During today's discussion, we will delve into how Hong Kong is well positioned to support its aims and how the BRI represents a multifaceted opportunity for the city. We have the chance to mobilize billions of dollars of private financing for critical infrastructure projects, the opportunity to advise on and shape sustainable development, and the opportunity to offer a wealth of professional services. Let's begin our discussion by hearing from Dr. Wang. So, Belt and Road Initiative, BRI, is a vision for strengthening connectivity between China and the world by supporting infrastructure development and bringing countries into closer economic partnership. It aims to increase international trade as well as other financial and people-to-people links. For decades, Hong Kong has served as China's international financial center, facilitating inbound as well as outbound trade and investment. Today, what can Hong Kong offer to companies and investors involved with BRI projects specifically? Dr. Wang, if you would, please shed some light.
Thank you, Diana, and it's great to be here at the Belt and Road Summit. Everyone knows, I think it's common knowledge by now, that the Belt and Road areas need a huge amount of infrastructure demand, and the public sector will find it very difficult to meet that demand financially. So some people, I think, originally thought that China will be the country that will bridge this gap and bring the money. But I think China, the BRI initiative is never meant to be solely relying on Chinese capital. And I have even seen many analysis about if, these projects go ahead and China's FX reserves will be depleted. But I think that is missing the point. A very critical part of BRI initiative is actually for China to play a catalytic role to bring the regions, to bring the economies in the region together, but also to bring the private sector and public sector together. So it's really a platform. So to have that in the general context, to understand, I think, that background, then we can understand what kind of role Hong Kong can play. Not only Hong Kong is a international financial center with deep liquidity. We have all these numbers here, right? Hong Kong is the #1 IPO center, and it has $3 trillion of asset under management by the asset management industries. But I think Hong Kong has other things very special that it can offer. So what are some of the special things? Well, it's soft power. So BRI economies are very different. They're at different stages of development from different cultures. Their financial markets are at different maturity, and they have different legal frameworks. So we think Hong Kong can help bridge this gap and differences with its very well-developed financial markets, with its deep liquidity, and also sound regulatory and legal framework. So we can help then develop suitable financial products and structures that can help investors manage the risk appropriately. So addressing these issues of liquidity, of risk control, of different structured products, I think are critical in bringing the private and public sector together for BRI. Often we hear demands or questions about for BRI to succeed, there needs to be government guarantees, either from Chinese government or from participating governments. But I think the question is, if the government gives guarantees, why would they need Hong Kong or anyone else, right? So we think that Hong Kong actually has the maturity, has the confidence, and has the platform, and has the innovation to produce the right products to bring the people who wants to raise money and people who wants to invest together. We need to have the trust in Hong Kong's ability to make that happen. And in today's world with, as an economist, I would say, with so much liquidity in the world, money are looking for yield. So if we can actually structure the right product, there is going to be a demand for these projects. In addition, I think Hong Kong can use its internationally recognized accounting standards and help set high standards for proper disclosure and audit for financial statement of projects and so on. So as Hong Kong helped to improve the transparency and risk management of BRI project, Hong Kong can help the fundraisers to lower risk premium and funding costs. Another area Hong Kong can contribute to BRI is ESG, so environmental, social, and governance. Again, these are increasingly key concerns for investors when they are looking to allocate their capital, and especially on big infrastructure projects in developing countries. I think they may be cautious. I think Hong Kong can really help set standards in these areas. A fourth area I think Hong Kong can contribute is its strength of independent and fair legal system that is based on common law. So with BRI economies coming from different judiciary systems, Hong Kong can help with contract enforcement and arbitration and build trust among different participants across the region. So Hong Kong is really in a unique position, in our view, compared to other competitors.
Thank you, Dr. Wang. Now, you've made very clear how Hong Kong can add value to Chinese as well as international companies involved with the Belt and Road initiatives across the full spectrum. I'd now like to ask Ms. Ding for her insights into how the city's capital markets and banking sector can help mobilize more institutional investors' participation for Belt and Road initiatives or projects. As you'll all know, Hong Kong is one of Asia's leading capital markets hubs. It's the world's IPO capital, has a substantial private equity sector, and its assets manager have around $3 trillion under management. So how can Hong Kong, Ms. Ding, leverage these formidable strengths to increase the flow of capital to BRI infrastructure projects, and what measures can policymakers take to accelerate the progress? Please.
Oh, thanks, Diana. And this is a good question. And also, it's a billion-dollar question. So how can we, gather more funds? How can we, gather more monies to the city? And obviously, for most of the financial centers, every participant every day is thinking about how to gathering, institution monies. And globally, if we see, institution monies, we probably are talking about like sovereign wealth fund, pensions, insurance, asset managers. If we categorize those as institution money and also long-term money, we're talking about 130 trillion US dollars. So obviously, not only Belt and Road Initiative and also Hong Kong, we definitely need those monies. But how can we attract those money to invest in Hong Kong, allocate more in Hong Kong? If we look at recent trends in the investment areas, we can easily find for the past decades, growth equities outperform value equities. So that's why we can see, from Hong Kong Stock Exchange aspect, we are doing quite a lot of reform, try to attract more growth companies to come to listing here. And also another interesting trend is we see for the past decades is also like passive investments outperform active investments. If we look at the United States and also European data for the past 3 and 5 years, we can see like 80%, almost 80% of the passive products outperform the active products. In another word, active funds, 80% of the active funds, they pretty much, the performance is lagging behind their major indices. So that's give us another question, how we can, booming our own passive investment, passive vehicles in Hong Kong. And obviously, Hong Kong Stock Exchange and also, industry participants, we are doing quite a lot of work, try to create a more better ecosystem for those sort of products. And also, if we try to facilitating Belt and Road and also take the advantage of one country, two system and Hong Kong's position here, I think we also need to build some, just like Dr. Wang just mentioned, some appropriate products. I think probably we, we need to build a mega, A-share or Chinese equity ETFs and also fixed income products. So for the past several years, we see like foreigners invest into Chinese bond market. Growth rate is tremendous. If I look at the number, by end of 2017, the foreign in the government bond side, the foreign ownership is only like 2%, also like 400 billion RMB. But by end of August, it's already above 2 trillion. So we see quite a lot of demands there, and how Hong Kong we can grab the opportunities, I think it's a question for all of us. Thank you.
Thank you, Ms. Ding. Now, 6 years since its inception, the Belt and Road Initiative has proven itself to be a powerful catalyst for growth in cross-country trade as well as investments. According to official data, the value of trade in goods between China and other Belt and Road countries in 2018 reached 1.3 trillion US dollars, growing by 16.4% year on year. It's also strengthening forms of connectivity that go well beyond physical infrastructure, demonstrating that it was always about more than transportation and energy projects. For example, the value of goods going through China Customs e-commerce platform rose by 50% last year, whilst China signed mutual visa exemption agreements for different types of passports with 57 Belt and Road participating countries. Now, Carmen, a question for you. As the BRI increases the flow of goods, trade and capital between China and other countries, how will this impact international use of renminbi, please?
Okay, thank you, Diana. I think this is, again, a very good question. And in fact, this is a question very relevant for Hong Kong. Now, indeed, I think one of the key outcomes of Belt and Road Initiative is that it will deepen the investment and trade flows between China and many of these Belt and Road markets. Now, in our opinion, Belt and Road and RMB internationalization should go hand in hand. And that's why, we have combined the RMB team and the Belt and Road team into one. I have to make sure that my boss knows that, because then he knows that this role is very important. Okay? Now, let's take a look at RMB. Now, I just want to remind the audience that this year, actually, we're celebrating the 10th anniversary of RMB internationalization. And actually, we have done a lot of achievement in internationalizing this currency. In fact, a very robust infrastructure to facilitate the adoption of this currency has been established. Let me quote a few. For example, the Renminbi clearing system, the CSOP 2.0. This clearing system allows renminbi to be cleared around the world in 5 days. It covers basically every time zone, from the US, London, everywhere. So this is important. The second is to provide the backstop liquidity. Now, PBOC has signed bilateral swap agreement with 36 markets to provide liquidity for them in case of need, and that equals to, I think, 3.6 trillion RMB. And then the offshore FX market has been totally opened for those corporates or investors that has a need to hedge their RMB exposure. And coming back to Hong Kong, I think a lot of the Stock Connect, Bond Connect program, that's opened a very efficient and easy to use channel for global investors to tap, the onshore capital market. Now, coming back to, Belt and Road. As I said, the Belt and Road present an opportunity to deepen the trade flow, investment flow, financing flow between China and these Belt and Road markets and countries. That actually created an ecosystem to use more RMB. And it's easy to understand, because when the Chinese SOE, when the Chinese policy bank, they finance, they invest into these Belt and Road countries, Belt and Road markets, and it would also trigger more flows. And it's a very natural way to settle all these investment and trade in RMB. And that brings also a lot of benefits, because first of all, it reduces unnecessary third-party currency risk. Because if China is doing a trade with Kenya, why do we need to use a third-party currency to do it? On the other hand, it also reduces a lot of dependence on US dollar by a lot of these frontier economy and emerging economies. I think that is a very important, because when I travel around, talk to a lot of central banks, they also feel the need that they have to diversify away from US dollar. So I guess this is very natural to use more renminbi in the Belt and Road. Now, coming back to Hong Kong, how can we play a role to provide capital, particularly private sector capital, to support the Belt and Road? I think the previous speaker talked about financing, IPO, but I do want to bring a perspective. This is how Hong Kong indirectly bringing a lot of private sector and global capital to support the Belt and Road. Now, you would also know that, as Dr. Ding said, that China has very, very big capital market. China's bond market is now the world's second largest, and it values at $13 trillion US. China's equity markets, again, is also the world's second largest equity market, values at $6 trillion US. But the foreign ownership is still very low. It's less than 2% or 3%. Yeah, what the Stock Connect and Bond Connect has been doing is using Hong Kong as a platform to allow global investors to access this market with a lot of ease. And the beauty is, everything is done in Hong Kong and subject to common law, like Dr. Wang has said. So just to quote an example, what Bond Connect has achieved. Bond Connect was rolled out in 2017, so it's less than about 2 years of time. According to the August statistic, there are over 1,200 investors already signed up to invest in the China bond market through the Bond Connect. This is very impressive because if you look at our QFII over almost a decade's time, they have only a few hundred investors have signed up. And more important, if you look at the nationality of these investors, actually interesting to note, the US domiciled investors account for 1/3 of these 1,200 investors. We're talking about a trade war, okay? And then, besides US investors, we're seeing investors coming from Japan, Taiwan, Europe, and a lot of different jurisdictions. Also important to note is that because of the index inclusion, 61 out of the top 100 global asset managers already signed up to access into the China bond market through the Bond Connect. Because they are buying policy bank bond, they're buying bonds issued by a lot of SOE that are active in the Belt and Road. So they are actually indirectly supporting and investing into the Belt and Road. So I think this closes up in a very nice loop about Hong Kong play a role in helping both Belt and Road and also Renminbi internationalization. Thank you.
Carmen, thank you for sharing your thoughts. Now, China hosted the second Belt and Road Forum for International Cooperation in Beijing this April. And it was attended by around 5,000 delegates from across the world, including the 36 heads of state who signed its joint communique. President Xi emphasized China's commitment to Belt and Road initiatives and projects that are open, clean, and green, and which conform to internationally recognized standards, or what many would call BRI 2.0. Ms. Lu, with this emphasis on quality, transparency, and inclusivity, how do you see China developing its collaboration with its Belt and Road partners, and what opportunities does BRI 2.0 create for commercial banks, please?
Thanks, Diana, for your question. I noticed some of your words, quality, transparency, and inclusivity. That's it. If we call it the new stage, BRI 2.0, I believe China and its partner will focus more on high-quality development at this stage. Firstly, the multilateral collaboration will be more open and on a higher level. Let's take an example, third-party market cooperation. Enterprises from China and their partners from all over the world could jointly develop projects in a third country involved in BRI. Since each of the parties has their own unique strengths, they can act as all kinds of roles in different stages, such as investor, constructor, operator, and others. If a project's investor and the financer or lender, even some operator, if these actors could be a multilateral combination, I think it compared with single main body project will have ability of resisting their ability of resisting political risks and market volatility risks should be greatly strengthened. Secondly, China and its partners will pay more attention on the application of international standards and international acceptable practices, as well as the commercial and financing feasibility. According of this, they will bring us more healthy business opportunities. Secondly, just Ms. Wang also mentioned, I think all parties will focus more on ESG and anti-corruption and sustainability. In addition to making money, I think it's also necessary to focus on improving the local welfare on the hosting countries, such as creating more jobs, reducing poverty, improving living standards of residents, and protecting the environment. It is also believed that these measures will also bring lasting vitality to the cooperative projects. So if you are asking me what opportunities would this new phase of the BRI could create for commercial banks, in my opinion, I would say it no doubt will bring us more and more feasible project or opportunities. And we welcome more and more high quality working partners join with us, whatever policy banks, international peers, multilateral organizations, export credit insurance companies, and all kinds of consultant firms. From the perspective of commercial banks, we are now more concerned about the opportunity about some fields on infrastructure, energy, minerals, also focused on production capacity cooperation industry, such as textiles, cement, steel, and so on, as well as some emerging industries, such as e-commerce, mobile payment, and other TMT projects. I would like to share a multilateral collaboration example with you. We once closed a deal with MIGA, that means Multilateral Investment Guarantee Agency. It's an organization of World Bank for a high-speed telecommunication project in Myanmar. The project was held by a Chinese company and a local partner in Myanmar. BOC Hong Kong, the commercial bank, financed the project loan, while MIGA provided the insurance. Myanmar had been the least connected countries for many years. In year of 2013, only around 6 million population had mobile services. After the project, 5 years later, the population rose to 60 million, rose 10 times. So this project rolled out 4,500 kilometer long optic fiber network in Myanmar. It covers more than 66 cities and towns in the Middle-South region of the country. It improves the telecommunications services. This will surely promote Myanmar's industry and economic development. This is not only a successful case showing the multilateral collaboration, but also a case improving the local welfare. Thank you.
Thank you. Thank you, Ms. Lu, for sharing your views. Now, in the interest of time, we've reached the last question of our session today, and this is open to all our panelists. We have discussed Hong Kong's distinctive strengths as financial and professional services hub for the BRI. However, Shanghai, Shenzhen, and Singapore also have considerable strengths as financial centers in Asia. Further afield, London is also pitching for BRI-related business. Former Chancellor Philip Hammond floated the idea of the UK helping to create a standardized BRI infrastructure finance asset class. So as we look to the future, how will Hong Kong continue, or how can Hong Kong continue to differentiate itself as a BRI hub in the face of its very keen competition? This question is open to all our panelists, so please. Maybe Dr. Wang, you could start.
Maybe I can start by saying that Hong Kong has not just a mature market, but it has diverse participants in the market. It has liquidity, especially RMB liquidity, rivaling outside of China the best. Also a very strong regulatory framework and legal framework, which I think is really its strength compared to in the region. So put all this together, and also more importantly, compared to Singapore, London, and so on, Hong Kong has the knowledge and connectivity with China more than anyone else.
Thank you, Dr. Wang. Carmen.
Take the second one. I think I'm the only perhaps Hong Kong people that's sitting on the panel. So I think one city's development may not necessarily be at the expense of the others. And in fact, other than competition, maybe we should look for how we collaborate. And in this regard, I think Hong Kong definitely, if we find a way to collaborate with Shenzhen is definitely being put as a blueprint for modern and international city in China. And just at the back of it, I think through this high-speed rail is only 17 minutes from Hong Kong to Shenzhen. And I think Hong Kong has something that Shenzhen would need years to build. But Shenzhen also have something that is really, that would lead the global trend, like the innovation, technology, digitalization. So I think if the two cities can collaborate, I think that we will be, very, very invincible, in my opinion.
Thank you, Carmen. Ms. Lu, please.
Okay, I think in the past decades, Hong Kong's prosperity and success proves Hong Kong acts very successful to be the east-west bridge for the investors. Of course, in these years, Hong Kong gained rich experience. Hong Kong differentiates itself not only being the top-tier financial center, but also having professional services in the project management, laws, taxation, accounting, and consultants. And we use international standards and practices. Currently, we have more than 150 licensed banks, nearly 1,000 solicitor firms, and nearly 6,000 accounting firms and tax consultancies in Hong Kong. Moreover, I think Hong Kong is an important window for the world to learn about China. We play an important role in policy coordination and cultural exchange between China and the Western countries. And we are very experienced in promoting multilateral cooperation. This will help China's partners to step in and further exploit the BRI market more effectively. Thank you.
Thank you, Ms. Lu. Last but not least, Ms. Ding.
Okay, thank you. So yesterday, it's a Teacher's Day in mainland China. One of the most famous teacher in China got retired, Jack Ma, right? Once he said, it's like, if one person try to be success, it's not, it's not that relevant with your capability, with your background, but the most important thing is your attitude, your commitment. So I think, today we're talking about competitions, about all those sort of things, and also Hong Kong, obviously, we all know we have quite a lot of competitive advantages, right? Common laws, simple and easy tax systems, and free cash flows, all those sort of things. But at the end of the day, it all depends on you and me, our commitment, how we can work together and bring Hong Kong to another level. Thank you.
Thank you. Thank you, Dr. Wang. Thank you, Ms. Ding. Thank you, Carmen and Ms. Lu, for sharing your insights this afternoon. It's been, I hope you find, equally as I do, a very engaging session. Ladies and gentlemen, the Belt and Road Initiative is evolving as a new network of trade and investment connections built on ancient roots. China is at its center, but it extends to the rest of the world and seeks to bring countries together in economic partnership. It is still early days for such a long-term initiative, but it already promises countless opportunities for Hong Kong. At its core, connecting mainland China with the rest of the world is Hong Kong's opportunity, as it always has been. My hope is that the ideas we've explored today will help you seize opportunities in all its forms and be a catalyst for the further development of BRI business in the city. To recap our discussion, we began by identifying Hong Kong's value add as an international financial center and service center. We discussed the need to attract and unlock more opportunities for the Belt and Road infrastructure projects. We also heard how Hong Kong, the world's leading offshore renminbi center, can benefit as the BRI accelerates the internationalization of China's currency. This imperative brings Hong Kong's unique strengths into play and can help enable China's vision for a transparent, open, and sustainable BRI benefits that will benefit all participants. As a panel, we strongly believe Hong Kong will continue to be on the forefront of driving Belt and Road Initiative in spite of competition from other financial centers. Hong Kong is special. We are China's leading international financial center, deeply integrated into global capital and trade flows, and powered by world-class talent as well as infrastructure. This gives us a very unique opportunity with the Belt and Road, and I look forward to further conversations and working with you all to capture this. Please join me in thanking our panel today for their valuable contributions. Thank you. Thank you. And ladies and gentlemen, have a great afternoon and the rest of the week. Thank you.
Thank you.